One of the things you've talked about is your early introduction to Wall Street. There was a lot of disbelief about the stock market in the house you grew up in, but then you got your first job caddying on the golf course, and all you heard was how much money people were making. Tell us a little bit about that time in your life.
Well, actually, people, if you grew up in the 40s, you heard about the big one, the Depression.
Yeah.
There's one coming. What you think? Risk averse. It was risk averse, the power of 4. And but I was a caddy, and people would talk about what stocks they're buying. I'd look it up, and a few months later, they were higher.
Yeah.
This is a pretty good deal. So I didn't have money, but in addition to talking about their shots, but it's a great role of a caddy because you're like an advisor to somebody. Just tell them, if you miss the screen, don't miss it to the right, or don't be short, or line up putts. It's incredible. My friends were delivering newspapers, at 5 a.m. I was making more on Saturdays than making the whole week. So, and the president was, Mr. Johnson was the CEO, and D. George Sullivan was the president, and I caddied for him. He said, gee, why don't you interview for a job at Fidelity?
How old were you when that offer came?
21 or...
Okay.
So summer of '66, somehow I was the only one that caddied for the president, so I got the job. There's I think there were 75 applicants for 3 spots, but I got the spot in '66, and so then I had to do 1 year award and 2 years in the Army, came back in '69, so I owe it all to being a caddy.
What did you have to do at Fidelity to pay your dues to the point where they were willing to give you money to invest for other people?
Yeah, I think they forgot all my mistakes because I had the textile, the worst groups, the textile stocks, the steel stocks, the metal stocks. I don't know how I ever survived that. That there weren't many winners there.
They gave you the stocks to cover that nobody else cared about?
Well, everybody had groups. Somebody did retailers, somebody did electronics, somebody did oil, somebody did truckers, somebody did railroads. I wound up with the dregs.
I wanted to ask you, what were some of the traits in the investors that you were learning from, or the people that you admired in money management? What were some of the qualities in those people or their habits that probably still resonate for investors today?
When I started, we had this person, Alan Gray. He went back to South Africa about 10 years later, but he would work hard, he'd research companies, he'd listen to my stories. He was probably the best role model. I remember Alan Gray.
Okay.
But my peers were all great. I mean, all the people around me, everybody in the research department was really talented. So we're loaded with skill.
It's funny. I interviewed one of your colleagues yesterday. She's a quantitative analyst at Fidelity. And it's so funny to hear you say that because she said the exact same thing. She said, any question I have about markets or the economy, this whole building is filled with talented people who know what's going on, and all I have to do is walk down the hall and get the answer to my question. Right. You still feel that way about the organization today?
It's unbelievable. I mean, Steve Weimer, John McDowell, Joel Tillinghast, Will Danoff. I mean, it's like the Yankees were, in the 1920s. And we're playing the Yankees right now.